Good morning, folks. Trust we are doing good. Welcome to another webinar series that we've got for you all. Good morning, good morning, good morning. I'm your host, Akinwale Chibike, and today we'll be talking about the best financial instruments for beginner traders. Okay, the best financial instrument for beginner traders. But before we hop into today's session, if you can hear me properly, please drop a message in the chat box. Good morning, Kelechi. How are you doing this morning? Good morning, Ajus. Good morning, good morning, good morning, everyone. Okay, so it's actually a pleasure having everybody on here today. I can see Debbie is in the house, Halimat is in the house, and Latifa is also in the house. Olariwaju and Fanla also in the house. Hope it's going well, everyone. How was your trading week last week? Before we open to today's class at all, let's just let's be merry, okay? Let's be merry. Let's talk about what happened the last week in the financial markets. Were you caught up in any of the news release? How did it go? How was your trading week? A lot of things like that, okay? So how was last week to you? Okay, how was last week to you? Last week, your trading week last week, how was it? Was it good? Was it bad? Were you struggling? I know somebody has something to share. He called me over the weekend and told me something very, very amazing, and I would give the person the permission to talk at the end of the class. So this client of mine actually called me and was happy. Okay, I was having a haircut at that moment, and he called me and was like, Professor, Prof, how am I doing? How's it going? I was like, fine, I'm cool. I'm quite busy at the moment. Can you call me back later? And he said he just wanted to let me know that based on what I explained last week on the Telegram group about inefficient price action, efficient price action, liquidity voids, order blocks, and imbalances, he was able to aggressively, okay, because I think it's very, very aggressive, okay, he was able to aggressively flip a 1,000 naira account to 10,700 naira just in 1 week, just in one trading week. And that's like a 1,000% return. That's 1,000%, like 1,000% return, or would I say 970% to be precise? 970% return in just one trading week. Like it was mind-blowing for me. I felt very, very happy because I felt very, very happy because I wasn't expecting such. I wasn't expecting such just from the little stuff I thought, and you were able to do figures like that. And that's the major goal with trading the financial markets. Put in what you can risk and risk it. Okay? Put in what you can risk and risk. That's why I tell people you don't need to wait to attend all the classes, or just start trading. The little things I share, you don't even need to learn or understand everything I've been explaining. You just need to have a idea of it and go to your charts and see these things pan out, then start applying it, start using it. Okay, that's just the idea behind it. That's just the major idea behind it. Before we open to today's class, can anyone remind me what we discussed in our last session? Okay, can anyone remind me what we discussed in our last session, the last webinar we had? Can anyone remind me what we discussed in the last webinar we had? Can anyone remind me what we discussed in the last webinar? Can anyone remind me what we discussed in the last one? So nobody remembers the topic. Nobody at all. Wow. Nobody at all. Okay, so in the last webinar, we talked about trading with small capital. Okay, trading with small capital. Trading with small capital, and it was just amazing getting to see someone coming to me over the weekend with a testimony that relates to what we discussed in the last webinar. Last webinar, I gave you ways you can grow your small capital. I even talked about the conservative aspect more, but someone going all aggressive in it and making 970% just in one trading week. I'm not telling you to go aggressive. I'm not telling you to do the same thing. Yes, it can be replicated. The same results can be replicated. It's simply rinse and repeat. But you need to take it a step at a time, a step at a time. You will surely do those figures also. You will surely do those figures once you understand the process behind flipping accounts or behind trading properly. And that's why you're coming to this session every single day, every single time of the week. That's why you're coming to get good insights, proper insights on how to do it. And that's just the major goal. That's the major idea. That's the major logic behind it. So, on to today's class. But before I hop into today's class, does anybody have any question at all? Any question at all about the financial markets? Any question at all? Majorly about the financial markets? Any question at all? Any question at all? Any question at all? Any question at all? Wow. You were on the last webinar, to be precise, Elimat. You were on the last webinar. I remember vividly. Wow. Okay. I'm sorry about that. You'd get the replay on our YouTube channel. Okay, the replay is on our YouTube channel. You get the replay on our YouTube channel. It's on our YouTube channel. Okay. So, any question about the financial markets? Any question about the financial markets before we hop into what we have today? Okay. So, in the absence of questions, let's dive right into. Okay, go ahead. Please drop your question in the question section. Drop your question in the question section, please. Okay, and let's be a bit quick with it so we can hop into what we have today. Okay, waiting for questions, random questions about the markets, anything you want me to talk about after we've discussed what we have today. Drop it in the question section, drop it in the chat box. Okay, got a question. Okay, I will show how to set a buy limit or a sell limit order. That will be after the session. Okay, just keep on dropping your question. Okay. I will show you that after the session. Okay. Let's just keep on dropping the question. The correlation between US dollar and US tech. Okay, I'll talk about that also. Let's keep on dropping that. Let's keep on dropping the questions and whatever I want me to discuss about at the conclusion of the class. Okay, how to place your first trade. Okay, after the session, I'll show that during the conclusion. Okay, so the best financial instrument for beginners trader. Okay, best financial instrument for beginner trader. Now, in this session, you learn financial instruments in general. What are financial instruments? Factors to consider in selecting financial instruments, top 5 asset classes, and the financial instruments to trade within them as a beginner. Okay, then conclusion. Today's class will be simple, easy, and straight to the point, so everybody can benefit from it. Okay. The first question is, what is a financial instrument? I'd like to get everybody's thoughts, suggestion on this. What is a financial instrument to you? What is a financial instrument to you? What do you understand by financial instruments? A tool to buy or sell goods. Wow. Okay. Anybody else? A tool to buy goods or services. Wow. Anybody with their own thoughts on what a financial instrument is? Let's keep on dropping the questions. I will respond to it. Okay. Anyone else with what a financial instrument is? Anybody? Okay. Only one person gave their thoughts on what a financial instrument is. Okay, I think I've got a message. They are derivatives that encourages financial exchange. Brilliant, brilliant. Anybody else? Trying to take it slow, easy, and steady so everybody can follow along. Okay, so in the absence of no other thoughts on what financial instruments are, financial instruments are basically assets, okay, or things that can be traded. That's what it means. They are majorly monetary contracts, okay? They are created, traded, modified, and settled. All it means, it's just showing interest in owning that thing, okay? In owning that thing. So financial instruments are assets or things that can be traded. They represent ownership of a certain thing, okay? Basically, it represents ownership of a certain thing. So let me show you an example, a real-time example. A real-time example would be you have a car, okay? I love cars a lot. That's why I like to use cars in my examples, okay? You have a car. That car is an asset to you, right? So we can say the car is a G-Wagon or an Honda, okay? The Honda is the financial instrument. The model of the Honda is the asset. Do we all understand? Yes or no? Okay? The Honda is the financial instrument. What type of Honda it is? Possibly it's an Honda Accord 2020 or 2021. It's what really defines the asset it is. Do we understand? Yes or no? Okay. I just sent out a poll right now. Please let's respond to the poll. Thank you. Okay, I'll come again. I said if financial instruments are assets that can be traded, assets that can be traded, and they are majorly monetary contracts, okay? They are signified, or the interest are shown in them because of they represent money. Okay, they are instruments that can be traded, and whatever can be traded represents money. That's basically what it means. Do you understand now? Yes or no? I'd like to get a lot of response. Do we all understand now? So I said if we are using a life example is an Honda, which generally all Honda cards are called Honda. Then the assets under is the financial instrument. The assets that can be traded is now the model, which is like an under Accord or an Accord 2021 or a Civic. Exactly. Currency gives value to money. Now that is basically what financial instruments are. And when we say financial instruments, that's where we talk about forex, stocks, indices, cryptos, commodities, and all. Now you might be wondering, are they not assets? Now these things are assets, but they are majorly called financial instruments because it is under them we now find the assets under, such as GBP, that's Great British Pounds, USD, CAD, JPY, and the likes. Okay, now to the next thing on the list: factors to consider in selecting a financial instrument. I like to get everybody's response so we can all blend along. What do you think are the factors you need to consider as a person, as a trader, when you want to choose a certain financial instrument you want to trade? Now, I'm not saying economic report or sorts. I'm just saying in basic terms. Okay, in basic terms, what should you consider if you want to trade gold? What should you consider if you want to trade the Nasdaq? What should you consider if you want to trade US 30, Wall Street? What should you consider if you want to trade dollar? What should you consider if you want to trade the pounds? What should you consider if you want to trade JPY? Okay, now what are those things you should consider? Factors to consider in selecting a financial instrument. Let's go. I'd like to get a lot of response on this. Okay, someone said market value. That's brilliant. That's brilliant. How liquid the pairs are. Brilliant. Brilliant stuff. Okay, volatility, the spread. Now that's some good stuff right there. Okay, now let's talk about factors to consider when selecting a financial instrument. Let's start with what Kelechi said: liquidity. So what is liquidity? I told you guys liquidity is money flow. Money flow. Now when we say liquidity, it refers to the ease of buying and selling a financial instrument at a given time. When money is flowing in a currency pair or in a financial instrument, it gives you the ease of buying and selling at any time. See, instruments, financial instruments with high level of liquidity tend to be easy to trade as one enters and exits a position with ease. See, if there is not enough liquidity on a financial instrument, you find it difficult to profit from that financial instrument. You would find it difficult to profit from that financial instrument. Liquidity means money flow. Now I'll continue using the scenario of Honda. Okay, I'll continue using the scenario of that car called Honda. Now, if Honda doesn't put enough money into their research team, nobody is going to buy the next car they make. Okay, because the next car they make depends on research from the team on what people want, right? Yes or no? Yes or no? Before you sell a product, you need to understand what people want from that product, right? And that is basically putting in money. That's like the money that is in that financial instrument, and that's what makes it easy to be able to buy and sell. Okay, so now the market or gold is very volatile. Gold knows you like volatility a lot, so it now has a lot of liquid money flow because it's a safe haven. What would you do to gold? You trade gold because it will be easy to buy and sell gold. It will be easy to enter and exit a position on gold. Am I making sense? Yes or no? Yes or no? Am I making sense? So that is the aspect of liquidity. money is flowing in that financial instrument. Money is flowing in that financial instrument. So it makes it easy for you to be able to buy and sell, or buy or sell that financial instrument. It makes it easy for you to be able to enter and exit a position on that financial instrument, be it a buy position or a sell position. I just sent out a poll right now. Please, let's respond to it. Let's respond to the poll. Okay, so that's the first thing we need to consider: liquidity. Like I said, it refers, or it is the ease of buying and selling a financial instrument at any given time. In financial instruments with high level of liquidity, high level of money flow, they tend to be easy to trade, as you can enter and exit positions at any given time with full ease. Okay, now to the second thing is volatility. Okay, volatility was said by Agios and Babatunde. Okay, volatility was from Agios and Babatunde. I just sent out a poll where we actually have a lot of number on today's call. Let's please respond to those polls. Okay, let's please respond to those polls. Wow, it's been quite a while. Christian, how are you doing? How are you doing? How's it been? It's been quite a while. I saw you on my session. Oh, he left already. Okay, so I do check it up on most of my clients that join my webinar. I do check up on most of my clients. And if you're not on the Telegram group, you are missing a lot. You are missing a lot. Trade ideas every single day. Trade ideas. We share trade ideas on the Telegram group almost every single day. And you can benefit from those trade ideas once you are able to check the explanation attached to the trade idea. Okay, you'll be able to benefit from it. You'll be able to benefit from it. It's easy and simple, very, very easy. Kelechi, kindly drop the Telegram link in the chat box. Thank you very much. Okay, so back to our discussion. We said the next thing is volatility. Okay, now what is volatility? Volatility is basically the rise and fall of a financial instrument. How fast it can rise and how fast it can fall. Okay, volatility refers, let's put it in a more appropriate manner. Volatility refers to the ability of a financial instrument, a financial security, an asset, okay, refers to the ability of a financial instrument to rise and fall sharply. To rise and fall sharply. And truth be told, volatility can be a two-edged sword, okay? It can be a two-edged sword. It can be a blessing or a curse at the same time. Okay, now how can it be a blessing? It can make you a lot of money when you hop on it at the right time. It can make you a lot of money when you hop on it at the right time. How can it be a curse? If you get caught on the wrong side of volatility, that's how it can be a curse. Okay, if you get caught on the wrong side of volatility, it's going to hurt you bad. If you get caught on the wrong side of volatility, getting caught on the wrong side of volatility will hurt you. That's why it's best advisable trade when the volatility is medium. So when the volatility gets high, there is a 90% tendency, if you're on the right side with the market, you will profit from it. Okay, high volatility tends to work to the advantages of traders who know what they are doing. Like I said, high volatility tends to work in your favor once you know what you are doing. It allows you to generate profit multiple times. Okay, the slightest of mistake, though, when there is high volatility and you are on the wrong side, can lead to losses. Okay, it can lead to a lot of losses in the financial market. It can lead to losses in the financial market. I like to let you know, once you get caught on the wrong side of volatility, it can lead to losses, and you accrue a lot of losses faster. Okay, now another factor to consider is the market value, which is the transaction, okay, which is the transaction cost, the market value. Matt made mention of that. Market value, which is the transaction cost. You don't want to trade a financial instrument that is too expensive, okay? You want to trade a financial instrument that is cheap or at a medium price level that you can afford, okay? A financial instrument with low transaction cost is ideal, as it allows you to generate optimum, the max return on any trade, okay? Now, this is related to your spread. This is related to the price of that financial instrument. This is related to the swap fee and the likes, okay? At Eagle Global Markets, we charge very low swap fee. We don't charge you commissions at all, and our spreads are low. And that is, we understand how crucial it is for our clients when they want to select their financial instruments. That is why we made all these changes and making the broker and our platform the best for you. The last but not the least factor in choosing a financial instrument is the availability of information. Okay, how available is the information of that financial instrument? How available is the information of that financial instrument? Truth be told, if there is not enough information about that financial instrument for you to capitalize on, I don't think you should venture into trading such financial instruments. Imagine someone wanting to trade Facebook, but he doesn't understand the financial aspect, okay, the financial aspect of Facebook. He just believes Facebook will continue going up because someone said so. He believes Facebook will continue going up because of people are using Facebook. He just believes such. The truth is, such person will make money. If he makes money out of luck or just based on luck. So understanding the financial instrument you want to trade is key. Let there be free flow of information on that financial instrument, because it will help you become more profitable with such financial instruments. Be able to gain access to the news of that financial instrument from time to time, so you get a heads up on whatever that financial instrument will be done. And that is it on factors to consider in selecting a financial instrument to trade. Now, it's very, very key understanding all these factors, because it will help you be able to do the right thing in the financial markets. It will help you be able to do the right thing in the financial markets, because if you don't know these factors, you continue trading all financial instruments instead of having those financial instruments that you're streamlined within, that suits your trading plan, that suits your trading idea. Now, top 5 asset classes and the financial instruments to trade within them. Top 5 asset classes and the financial instruments to trade with them. So, what are the asset classes that we all know? I'd like to get a response in the chat box. I like to get everybody's opinion. What are those asset classes? Those financial instruments, to be precise. Those financial instruments, the asset classes and financial instruments. Okay. Let's start with the asset class first. Okay. Let's start with the asset class. Okay. Let's start with the asset class. Tell me the asset class of financial instruments that you know. Okay, waiting for response. Okay, someone said gold. Wow. Crude oil. Okay. Exactly, metals, CFDs. I didn't say the financial instrument. I'm talking about asset classes. Okay, asset classes. Okay, so metals, CFDs. Okay, metals, CFDs, I consider both under commodities. Okay, stocks, currencies, exactly, crypto. Okay, Or is there any other asset class that I don't know of that we all know of? Please do if you do know of. Okay, we just talk about the major ones. Okay, we just talk about the major ones. ETFs, yes, bonds, equities also, but we'll talk about the major ones. Okay, the likes of forex, stocks, indices, commodities, and cryptocurrencies. Okay, now let's start with forex. To you, what do you think is the best financial instrument under forex? Under the foreign exchange, the best financial instrument that is very easy to trade, no stress at all. Let's see. I'll be giving three, actually, three from my own thoughts. How those three pairs you can trade comfortably without having any issues. Okay, someone said USD, someone said EU, GU, GU, UJ, NU, USD, JPY. All of these pairs are amazing pairs, amazing pairs. Now, the top 5 asset classes are forex, stock, indices, commodities, and cryptocurrencies. Okay, that's the top 5 asset classes. And under forex, the 3 best financial instruments to trade is, to me, I'll be saying 4, not 3 anymore. 4, okay, is EUR USD, GBP USD, EUR GBP, and CAD JPY. To me, those are the best financial instruments. Now, why did I choose those 4 financial instruments? The reason I chose those 4 financial instruments is because of every single piece of factors that needs to be considered in selecting a financial instrument. They all meet up to above 50% of those criteria. Okay, they have enough liquidity, they have enough volatility, they are low transaction costs, and the information about these financial instruments are always available. Okay, I said EUR USD, I said GBP USD, I said EUR GBP, and CAD JPY. Okay, EUR USD, GBP USD, EUR GBP, and CAD JPY. These are like the best 4 financial instruments under forex as an asset class. Under forex as an asset class. Under forex as an asset class. I'll respond to all questions. Okay, I'll respond to all questions once I'm done with the conclusion. Okay, now let's move on to stocks. Now, you don't trade all stocks. Okay, I want to tell you this. No, please understand this. You don't trade all stocks. Okay, you don't trade all stocks. You don't trade all stocks. The reason you don't trade all stocks is, I believe it is based on hype. Okay, I believe it is based on hype. To make the most money out of a stock, you have to trade a stock of a company that is in trend. Okay, now what is in trend now? Electric vehicles. Okay, EV cars. If you want to make a lot of money this year, just buy a stock or a share of a company that manufactures EV cars, electronic vehicles. Okay, and just hold it. You see how much you make. Because what really that is trending in this time or this current state is electric vehicles. Another thing you want to venture into when it comes to stock is medicals. Okay, medicals. Exactly. You do it. That's why I said, once you've done your research and you know what is trending, you want to venture into what is trending, because that is where the hype is going to. That is where the money is moving to. For stock, there is no top instruments. There is just based on what is happening at the moment. Green energy, exactly. Green energy, EV cars. Based on what is currently happening, venture into what is currently happening. Because if you're looking like the likes of Amazon and all, yes, they are in vogue, but they need to keep structuring to the way life is moving, or an angle where life is turning. Now, for indices, the best 3 financial instruments to trade under indices is the Dow Jones. Dow Jones can also be called US 30. Can also be called US 30 or Wall Street. Okay. That's Dow Jones. The next is the NASDAQ. The NASDAQ is called US Tech 100 also, or US 100. And the last but not the least is US 2000 or Small Caps 2000. I'll type that all out in the chat box. Dow Jones, US 30 or Wall Street. Yeah, I'm typing them out. I'm typing them out. You've got nothing to worry about. NASDAQ or US Tech 100 or US 100. Then the last one is US 2000 or Small Cap. Now, the reason, like I said, the reason I chose these financial instruments is all because of they meet up to the standards of every single factor that needs to be considered in selecting a financial instrument. Okay, that is why I chose these financial instruments. Now, when we talk about commodities, I'll gladly pick gold. I'll gladly pick crude oil, then silver. Okay, so for commodities, I'll pick gold, crude oil, and silver. And for cryptocurrencies, okay, now you might be wondering, I won't be picking Bitcoin. Okay, I won't be picking Bitcoin. Why? Because I feel it is overpriced in the sense that a regular man can't afford one BTC. Okay, so I'll be picking the ones that are way cheaper, that I feel it is very, very easy and still meets up to the factors. Okay, still meets up to the factors. I'm picking the likes of XRP, that's Ripple. I'll be picking the likes of LTC, and I'll be picking Ethereum, ETH. Okay, so I'm picking the likes of XRP, that's Ripple, LTC, that's Litecoin, and ETH, that's Ethereum. So those are the top 5 asset classes and financial instruments to trade within them. Now, to sum up everything we discussed today, financial instruments that I've made mention of on every single asset class, they provide easy ways to make money from the financial market. They are one of the easiest things to trade to make money from the financial market. You can buy and sell any of these financial instruments easily, and it all starts by you taking the first trade. Okay, not just by knowing all of these things, but by you taking the first trade. That's how you do it easily. That brings us to the end of this session. So I'll be going through the question section right now, and Halimat said, can I show how to set a sell and buy limit? Okay, let me load my trading account and I'll show you how to set. Halimat, please, you need to be specific. What platform? Is it the cloud trade or the copy trade? Okay, the cloud trade or the copy trade. Sorry, the cloud trade or the MT4. Okay, the cloud trade or the MT4. MT4, okay, I'll just do a screen record from my mobile and send to you. Okay, I'll just do a screen record from my mobile and send to you. That's more easy. I don't have the MT4 logged in on my PC at the moment. Now, I just said correlation between US dollar and US tech. Okay, let's go to my screen and I'll gladly show you that. Trying to load my charts. Okay, trying to load my charts. Okay, so US dollar DXY. Now you can see DXY is going up. Okay, let's just look at this from on the 11th. Okay, on the 11th. Now let's compare it with US tech. Now I want you to understand that a minute, please. Now I want you to understand that the US tech, okay, is the color red and green candle. The US dollar is the black and green candle. So what can you adjust by looking at this? What can you deduce? What can you deduce from the chart? Just by looking at this adjust, what can you deduce? Let's start from there. You don't really have a correlation. Now we're trying to get correlation directly. Do you think they have a correlation just from what you're seeing? Is the correlation positive or negative? Is the correlation positive or negative? Exactly, the correlation is negative because every single time Nasdaq bought, which is US 100, the dollar itself sold off. Okay, every single time it bought. Just this. Let me make it more specific. This was going up. This went down. Now, I won't say the correlation is 100% negative because at some point in time, they were moving together. So I just say the correlation is something I don't want to use to make decisions when I'm placing trades. That's what I would just pinpoint right there. Because look at this right there. Let's look at this right here. It came down. This came down also. Now, I'm not expecting correlation to actually be 100% the same, but this really doesn't add up. So this correlation is something I would not want to use to make trading decisions. Do you understand that, Juice? Do you understand now? Yes, it's negative. Fine, but the correlations are not really inclined the way I want a negative correlation to be. Now, I'll show you an example. This is the one for, this is dollar, right? Now, I'll show you dollar against GBP USD or ER USD. Now, you tell me if the correlation is something you want to use to make trading decisions. Now, is this a correlation you want to use to make trading decisions? Yes or no? They are the correlation is negative, right? The correlation is negative right here. Now, is this what you want to use to make a trading decision? Yes. Yes, I want to use this to make a trading decision because it's negative. I understand that once dollar is going up, I'll be selling ERUSD, basically. But if you go back and look at the one for dollar and US 100, I don't want to like venture into it. Okay, Vasi, I'll do that. I'll send you a message right now after the session. How do I know the right time to hop into a trade? Now, I've explained this to multiple times, and I will say it again for the sake of Halimat. Okay, how do I know the right time to hop into a trade? Now, I'll show you an example. I am looking to sell gold. Okay, I said this last week or so on the Telegram group. I'm looking to sell gold. I was looking to buy gold earlier if gold traded back into this POI with a 30 pip stop loss. Okay, that's a 1 to 2 risk to reward ratio. I'll make 2% of my trading account if it does activate, and I'll lose 1% of my trading account if it does end in a loss. Now, my trade didn't come back to where I expected it to come back to for me to buy. I did not buy because of that. Why did I not buy because of that? I was being conservative on my trade. See, once you have an area of interest where you're looking to trade a financial instrument, if it doesn't go there, don't bother taking your trade. Why did I choose this high as an area of interest where I'll be looking to sell? I chose this high because of it's an order block. It's an area of resistance. So I want to sell at resistance and buy at support. Now, I know there are a lot of people selling here today. Why am I not selling there? Because of the way I trade. I already have an idea that this is where price is going to come to. And this is a low risk liquidity run right there. There's a low risk liquidity run or a phantom trend line. Okay, low risk liquidity run right there. And there's a phantom trend line. So I feel it's still going to go up. So whoever sold gold today, I'll just laugh, and if it goes up, it's go to my limit order and activate my limit order for me. So I use order blocks to get my entry where I want to enter my trade. If it doesn't go there, I won't enter because I understand the market will give off false signals so I can enter, but I won't. I'll just wait for it to get to where I want it to get to before I place my trade. It's very easy and simple. Okay, Matt says his account has just been created. He would like to fund his account. Okay, Matt, please do join the Telegram group and drop a question there. I'll respond to it there or send you a message privately so I can send you the bank details to fund your trading account and send you videos that will get you started on trading global financial markets. Or better still, you could reach out to your account manager. They will help you with every single thing you need, ranging from the videos to the assistant, and also you get my personal number to call me, and also if you need more clarity, I'll be giving it to you via phone call. Okay, so you've got nothing to worry about at all. So in the absence of no further question, it's a pleasure having everybody on today's session. Thank you very much for joining me. I'm your host, and I remain your host, Akinwale Chiwike. Good luck and good trading. Catch you in the next video. Cheers.